talk to us about the IT pack. That has declined by about 3.5%, and that is after giving returns, phenomenal returns in November and December. So what's weighing on these IT stocks?
If I look at the top four stocks in the IT, the TCS, Wipro, HCL, and Infosys. Infosys has given returns over the last 1 year of barely 0.09%. HCL, probably because of a lower market price of only 22.18 right now, has given 34% returns over the last 1 year. Wipro also, just 456 rupees market price, has given a returns of around 17%. But Infosys and TCS barely above 10%. But one of the reasons, even if you look at the headcounts in all these companies, Infosys recorded a reduction in headcount of 16,454 in the second quarter of the financial year 2024. Wipro reported a drop of 14,472. Tech Mahindra lost 13,308 employees. TCS saw the headcount go down by 7,186. So the headcounts have been going down. That could be one of the reasons. But if I can broaden the purview of our research to the tech sector, not just IT, gaming has done very well. So I'll just give you some numbers. 15.4 billion, that was the number of games downloaded in India this year, despite the rise in GST, and this was second only to China. The number of GCCs that have come up in India is 1,600. These are global capability centers that are offshore units of multinational corporations. And this is likely to, this has come from prominent names like MetLife, Warner Brothers, Fidelity, and BlackBerry. So that is, and this is likely to increase the employment in India by 1.8 lakhs in the coming year. So yeah, so if we tech sector has not done well, IT, but tech broadly has done slightly better.
And Amar, I'll come to you here. Do you think it's a consequence, a kind of correction that we have seen in the first 3-4 sessions of 2024 in the IT pack, a direct consequence of this uncertainty regarding the rate cuts in the US?
I would say, looking at the IT pack, if I look at the Nifty IT index, so that witnessed a significant rally from almost 30,000, I would say that was in the first week of November, to a high of 36,000. So that was a significant, almost a 20% rally. Now it's around 34,300 odd levels. So you rightly said, see, what happens is that whenever there is a major move, there is an opportunity for investors to book profits, be it, and the large caps, look at the names of TCS, Infosys, they also witnessed a significant rally across the board for other IT stocks as well. Having said that, I would say IT still looks positive on the charts. The IT index looks positive on the charts. So this is again a healthy correction. There could be some further correction to the indices. If I look at the major IT stocks, like for example, TCS, again, TCS is approaching a very crucial support zone. So somewhere around 3,600 levels is going to find support, and we could expect a bounce back. So what is likely to happen in the IT space is that most of the IT stocks could go in for some consolidation. We're not expecting some major correction, but it could be in for some consolidation, which we could witness over the next couple of weeks till we see some further clarity coming from the US.
Good morning, Mr. Singh. I'm talking about Infosys. This has given the least amount of returns in the last 1 year in the entire IT pack. Is there anything we are missing, or is it a good time to get into this stock right now then?
See, if you ask me, Infosys really doesn't inspire much confidence looking at the long-term charts as well, because short-term, we've seen the stock pull back from 1,400 levels to almost 1,600 levels. Currently it's around 1,500 levels. But if I look at the long-term trend, so the momentum is missing from a long-term perspective. So if you ask me about IT stocks, at least specific to Infosys, I would say that it really doesn't inspire too much of confidence from a long-term perspective until we see a trend change and the stock sustaining above its recent highs. So So that's going to be very important. If I look at TCS, TCS is slightly better on the long-term charts as compared to on a comparative analysis vis-a-vis Infosys. So Infosys would need to trade above 1600 levels consistently for a trend change, and TCS would need to consistently sustain above the 3800 level for a significant trend change. Otherwise, we could witness consolidation in these counters.
All right, that's the view coming in from Aamar Deo Singh. Sir, always a pleasure speaking to you. Thank you for joining us here on News 9.
Thank you for having me on the show.